Okay, so we're back for day 2 of this. I know, Ira, you're joining us, and so just kind of, you could either, I'm recording this, sorry, but you could either throw some earbuds in and watch it on the computer here, or you could just join in. I don't know, it's up to you. We've basically done step 1 and most of step 2 here, right? We had the bell ring, and I said, perfect, we can stop here tomorrow, or we'll start here tomorrow. Were we on that third adjusting entry? Had we done the T account version of it? And it was just a yes? Oh, perfect. We're right here. So we started here and the bell rang. So it's a perfect time to pick up right where we left off. I'm on page 194. You wouldn't even need to be there. It said accrued salaries of $210. Okay, so what does that mean? $210 worth of salaries have happened. It's just that we have not paid them. I see a credit there, so the other side has to be a debit. If this is the third adjusting entry that we're going to list, it would be listed as 3 or C. C. And now we're simply going to put this debit and this credit and this C in the appropriate columns. Here's the debit, and here's the credit. When we really get into some crazy worksheets, we'll have through J. K, it's crazy. So that's coming. So we've done these 3 adjusting entries. The book asked us to. But before we move on to step 3, we simply have to total it. So put that $1,730 in the total for the adjusting entry columns. You'll notice we have another total line down here. That's the total of the riffraff section. Remember, we have the main accounts up here. This middle section, which I call the riffraff section, is just used as accounts are needed. They get listed there. And then at the very bottom, it shows a net income. Do you see net income listed there? Perfect. And then the totals at the very bottom. So 3 sets of totals. The totals for the main accounts, the totals for the riffraff or extra accounts, and the very end totals when we calculate, in this case, net income. So the homework that you do over the weekend, that's why I wanted to start with that and preview it. You're not even going to do these 2 columns. They are going to have the adjusted trial balance all set for you. So what I want to do now, line by line, is bring our stuff over. Remember, a worksheet is a tool that accountants use to build their better financial statements. And beyond that, it's just basically moving numbers from one column to the next. I see trial balance and adjusted trial balance starred. What does that mean if we starred those? It's their normal balance side. So all of our assets will get listed in the debit column. So let's do those line by line. What I want you to think of is like jumping in your car, and if it's smooth sailing, you're just simply going to drag that number over. I'll tell you about a road bump here in a minute. So we jump in our cash car, $2,320. It's smooth sailing over to here with no road bumps. AR, jump in that car. Again, it's annoying because it's on 2 lines. Yours is on 1 line. Jump in that AR car, $2,440. cruise right through the adjustments because we didn't adjust AR in this case, and it's still a debit balance. Now what's going to happen next? Whoa. We jump in our supplies car, $1,880. Is it smooth sailing? No, we have this major road bump that's stopping us. So if we have a debit with a credit following, are we going to pick up those friends or are we going to ditch them? We're ditching them. And I know I've got kind of a silly illustration going on here, but you jump in this car. If it had been a debit, we'd pick up some more friends, but because it's a credit, we're going to subtract that to equal its new balance. But you guys, that's what we did in the T account. That's exactly what we did in the T account. So that should make sense. Okay, that does it for assets. Now we're going to start listing the liabilities. And you know, even if you want to do something like this, assets, and like mark it up a little bit just so you can visualize that. We had cash, AR, and supplies. Now we're going to get into the payables. Those all have credit balances. So we take that 1,120. I don't see any road bumps along the way. We're going to take that 1,120 and simply drag it over. Because it was a credit in trial balance, it's going to be a credit in adjusted trial balance. It's the same. And that goes for all of the other ones. Now let's take a look at unearned service revenue. We get in our unearned service revenue car of $240. It's got a credit balance, and I already have a debit number in there. Are we going to add or subtract that? This has a credit balance. All of a sudden there's a debit there, so we're going to subtract that to equal its 100 over here. And the reason I'm going kind of fast through this is these are just the T accounts that we built yesterday. They're the same thing. It gets annoying to get the lines matched up. And so if you have a piece of paper, you know, even if you want to grab like another piece of paper here and like lay it line by line, that would help. Kind of like what I'm doing with my screen. I believe we have one more oh, we don't, I guess. So here's our two liabilities that have credit balances. Now we're on to capital, which of course is owner's equity with a credit balance, and we're simply going to jump in that owner's capital car of $3,600, zip over to the adjusted trial balance credit column as well. Did we have to stop and pick up friends or drop off friends? No. While we're here, let's just keep zipping over and extending our trip across this worksheet. You now take these balances, and extend them over to where they need to go. Are they income statement or balance sheet accounts? Well, they're assets, liabilities, and owner's equity. That tells me I don't need to use the income statement columns. If you feel comfortable Xing them out like that, what line is this? What line is owner's capital on for you? 6. So you can basically get rid of all of the income statement columns because you don't need them for that top half. Don't get rid of them on the bottom half. And now, simply, I'm going to just show you one. Go back to cash. We're going to just jump back in that cash car. We're not picking up any friends anywhere along this way. And we're simply going to put them into their correct columns that they go in on the balance sheet. It's simply moving numbers. So why don't you slide all of those over even further yet? This is a matter of simply moving numbers. Make sure that they're the correct line number, or in other words, the correct account, and make sure they're correct with debit and credit. The only columns that won't follow the normal balance rules are the adjusting columns, because that's where we use them. Before we move on to the bottom half of this worksheet, because the top half is done now, what questions do you have? What stumps you? What annoys you? Or is this easy? It's so-so, isn't it? It's little. And I would think that would annoy you a little bit. Just really try to use like another piece of paper or a ruler or something to keep your horizontal linear feel comfortable, okay? Your weekend homework is just the adjusted trial balance will be done and you're shoving over, okay? What's next? We're starting our income statement stuff. Let's jump in our service revenue car. I see it's got a credit balance of $2,400. I jump in the car, hit the gas, and I stop at another credit. If a credit balance grabs another credit, is that an adding or subtracting? We're adding it. So 2,400 plus, we earned a little bit more. 140 is going to equal 2,500. So you just got to remember when you hit the gas and you have to stop, you have to look at, okay, in this case it was a credit. When I stop, I'm picking up, friends, because it's another credit. You just got to remember which side of the big T you're on. Let's not extend balances just yet, okay? Now all these expenses, and again, this is on one line for you, which I'm glad, -2, which is kind of annoying. We jumped in our salaries and wages car. It had a debit balance. We stop, and are we picking up, friends, or are we subtracting them? Are we kicking them out? If we had a debit and we have another debit, it's adding. Now we're back to the debit column because I'm looking at these stars up here going, normal balance sides. Miscellaneous expense, we picked up no extra, friends. Okay, before we do anything else, we're still in the top section, what I would call our normal balances. It's time now to extend what we did in this little section over to the right spot. Do we need the balance sheet for this one? Nope, because these are income statement accounts, revenue and expenses. What line is your miscellaneous expense on? I think I wrote that in. Is it 15? 9? Oh, I wrote income statement, sorry. So be careful to not cross out too much in this corner, okay? So do you see why I'm crossing those off? We don't need them. When we're extending balance sheet stuff over, we don't need income statement. When we're extending income statement stuff over, we don't need the balance sheet. So now we get to what I call the riffraff section. You're not going to see the book call it the riffraff section. And again, I learned accounting without the riffraff section. This book, the authors decided, well, this is our main worksheet. These are our main accounts, our assets, liabilities, and owner's equity, and our revenue and expenses. But because we have all these add-ons down here, we need to add on what we use during our adjusting entries. So just because they didn't have a home up here, we're going to have another little add-on section down here. Well, really, it's not that difficult. And let's write in where they belong. I see supplies expense. Is that the first one you guys have listed under totals? Supplies expense? I see expense. That tells me it's an income statement and it's an expense. Salaries and wages payable. Where does that belong? Balance sheet, thank you. And it's a liability. Are those the only two? Okay. So when I jump in my supplies expense car, started with nothing, I have a debit. So 0 plus another debit is itself. Why did this show up? Why are we going to extend that to the income statement? Because that's where it belongs. Oh boy. However, when we get into this liability, it's got a credit balance, 0, and I look over here, there's nothing there. So I look in trial balance, nothing was listed in credit, so 0 plus 210 will equal 210. And why am I shoving this way over here? Why am I shoving this 210 way onto the right side? Because it's a balance sheet credit. Is the riffraff section kind of annoying? I think it is. Maybe you guys don't know the difference, but the way I learned it, it was a little bit different. Okay, now for the confusing part. We have another total row because now we've totaled our top section or our normal accounts. We've totaled our riffraff section or the extra accounts. Now we need to total everything. Everything. Have we done the 1730? Yes. Did we even do the 7570? No. Okay, plug that in. Do you see all of these single and double rules happening? What I want to do is actually bring you to a whole nother slide just so I can have my numbers bigger. But we're basically totaling our debit and credit columns. For trial balance, they equaled. For adjustments, they equaled. For adjusted trial balance, they equaled. That is why you see the double rule below, because our math is done. If we'd add up the 1, 2, 3 expenses under income statement, it equals 2,310. That one revenue number can be extended down, and that does not equal 2,310. If we keep going, we'd add up our debit column and our credit column for balance sheet, and they don't equal. So we are not done with our math. We are not done with accounting because right now our debits do not equal our credits. How do we know we have a net income? Other than the answer key showing you that you have a net income. I want you all, and I hope usually it doesn't work down here very good, but our revenue is greater than our expense right now. 2,540 is greater than 2,310. Not by much, but our revenue is greater than our expense. So now what I want to do is I'm going to leave this one. You got a minute, you guys? There we go. This is basically the same thing that you guys have down in that bottom section, right? It must be. Here's my income statement, debit and credit columns. Are those our numbers? Yes, I think so. Here's what I just did with you. I said our revenue or our money in is greater than our money out. Okay. I wrote, these are our panic button numbers. You might want to write that out in the margin. These are panic button numbers because our debits do not equal our credits. They're not equaling each other. And that's panic button mode for any accountant because that means, whoa, what are we going to do to get them to equal? Well, we need to get it to equal the larger number. So I'm going to show you what the end result is going to be. So we're going to take our larger numbers and extend those down. So you're going to skip a row and go down to equal 2,540. What line is this 2310 and 2540 on in your book? What line is that on? Where the panic button numbers, which one is that on? What is it? So this is line 13, this is line 14, this is line 15. 13, 14, 15. Okay, so that's kind of where we're at. It's panic button mode because our numbers do not equal. We are going to then extend down by skipping a row. We need these to equal. So we're going to bring down the larger number, and we're going to force the other one to get there. Well, let's just focus on income statement for a minute. Okay, if I take 2,540 minus the smaller friend of it that's panicking here, we're going to see a difference of 230. So if I'd add 230 then, miraculously, the two will equal. Now here's where accounting gets kind of cool. I have a debit of 230. Over here, I have to credit it for 230. But when I say accounting gets kind of cool, if you take 5,260, or the larger number in this case, minus the smaller one of 5,030, it happens to be 230. So these numbers that I have squared out are the difference of both of these panic numbers that don't equal right away. And then of course we'd single rule and double rule because our math is done. What do you think? It's right or wrong because it's accounting. It's basic debit and credit rules because it's accounting, but it's just a lot in a small little space. That's why I made this large one for you. Sydney. Yes, it is. Yep. Yep. Now, can I really throw a curveball at you? What if all of these numbers had been flipped? What if, oh, here's me just doing some extra math here. What if we had, and I don't write this in, but this is just kind of a theory-based what if our revenue was 2,310 and our expenses were 2,540? So this is the credit, this is the debit, this is expense, this is revenue. When our expenses are larger than revenue, what do we have? A loss. We'd still extend down that large number, 2,540. We're trying to get this to equal 2,540. We'd still have that 230 there, but that's a loss. So then on the debit or on the balance sheet side, what's going to happen? Oops. If we had a credit here and all these numbers were flipped, this one would have to be a debit. And a debit to a balance sheet from a owner's equity perspective is a bad thing. It's kind of like drawing. most of the stuff that you do will be this format up here. You're trying to force the biggest number to equal the smaller number. Yes. Fernanduri? What? Fernanduri. But these were the numbers. For real? 2540 and 2310. Oh, goodness. That's definitely a mistake. Right, net income. Yeah, and sometimes the book has mistakes. Because our revenue definitely exceeded the expenses. That's crazy. Now I want to look at my owner's, now I want to look at my answer key one more time, but yeah, mine says net income and mine says Nanduri. And you have Nanduri? Okay. And there's definitely more revenue than expenses. So yeah, your worksheet is wrong.